So today was one of those days in the stock market where you look around and you go, what just happened? There's these moves that are happening that don't make sense. And obviously we had a big night of earnings. Obviously tonight we've got Meta that's going to be reporting. But yesterday there was a few companies that reported earnings and you kind of looked at them and went, why is that happening? And it was a really strange day in the stock market. So we're going to have a look at them and talk about what's going on there. So hope you enjoyed the video. If you could, smash the like button. Now, obviously we're going to start off with Visa. So Visa was the key one that I looked at to see how the economy was doing. And the strange thing with Visa is that the stock actually went up in after hours. It then started going down, and then today it's actually gone positive on the day, which was a really big swing that was going up and down. The market seems to be undecided if it wanted to put the stock up or if it wanted to put the stock down. Overall, the earnings were very good. They announced the dividend increase. I think they also increased the buyback. But the big thing is we wanted to see if the economy was still holding up strong. Are they still seeing payment volumes very good or very high, strong spending? And that's what it was. They saw it. They saw the strong spending. They saw the cross-border. This is what we wanted to see. So the suggestion is, at the moment, is the economy at the moment, people are still out there doing the transactions. So that was really good from a company's point of view, is that there seems to be no slowing down, or Visa noted there was no slowing down in the economy at the moment that they're noticing. So as they can see here, the quote was, throughout the year we have seen resilient consumer spending, ongoing recovery of cross-border travel versus 2019, and continued growth across our new flows and value-added service businesses. Very good overall. Payment volumes up 9%, cross-borders up 16%. Very good numbers from Visa. So that kind of fear of around a 2023 recession looks like if there is going to be a recession, that has knocked it back probably to 2024. I think obviously when we do get to the wards, you could even have a weak Q. Obviously, Visa reports their Q4 and Q3. So when it gets to Visa's Q1, which will be Q4 for what we would accept as Q4 over that Christmas period, I would say that even if we have a slowing down time, just because everyone's out with that kind of festival season, probably would cover any cracks up in the slowing economy. So realistically now, I think that would confirm that we were not probably going to see a recession more than likely until 2024, really. So yeah, very interesting and a bit of a surprise there. Next one is PayPal. So with Visa coming out with strong earnings, you probably expected PayPal to react pretty positive off that. And it did slightly when the actual earnings came out. And then in pre-market, boom, stock down again, another 5%. It's like, wow, I can't believe how much Visa has suffered in these last couple of months. I mean, how long do we call it until we actually get to, Meta 2.0? I think Meta actually got down to 8 times earnings, and PayPal is currently 14 times earnings. But on a forward basis now, PayPal is actually down to a 9 times forward earnings. So sooner rather than later, because the profitability is really ramping up on PayPal, that P is going to drop and drop and drop, and it will hit that forward earnings of 9 times earnings, which is absolutely bonkers. But yeah, I mean, we're down to a 9 times earnings, and since we saw the last update in PayPal, I think the stock was, I think it was a Wednesday, 2nd of August when they reported. You see, it was a $73 stock, and the stock actually were putting a bit of a recovery as the summer went on. And only a couple of months ago, the stock was $73, and since then, the stock is down nearly 30% in that time frame. And you're looking at PayPal going, why is it down since that time frame? It's really weird. You look at the last earnings we had. Oh yeah, the 2nd of August. So that was. Did I say the 2nd of August? I think that was a really good guess, actually. It was, look at that. That's not a bad guess. I should have checked that a little bit earlier before guessing. But it was 2nd of August. And when you look at those numbers there, I mean, the EPS was a beat. Revenue was a beat. You look at all the numbers good. The guidance good. They actually increased what the EPS was. They actually said they're going to buy $5 billion back of repurchases now, share repurchases, which is absolutely crazy for a company that's valued at 56 billion, but it can because it's throwing that much profitability off. 9 times forward earning for a company that's, this is supposed to be in a week time frame, and it's growing, 7%, forecast to go up to 8%, I believe it is, in the next quarter. 8% on a spot basis, and EPS growing double digit. Like, absolutely bonkers. Like, this is the last quarter was really good, and yet the stock's down 30% since that time frame. It's like, why? It don't make sense. Like, this is the big thing with PayPal. You look at it and go, it's just not following the trend of the financials, which is unbelievable to see. And today, I mean, Adyen went down, and maybe that's the cause of why PayPal's suffering. Adyen went down as well because of another company, which was Worldline came out and they downgraded the guidance, saying they've seen weakness. They particularly called out, I think it was Germany, that they identified as a bit of a weak area. They cut the guidance, and people looked at adding another European company and go, well, I wonder if they're going to be a little bit weak. And they sold off on the day, and at one point there was actually down over 10% on the day, but started to recover as it went on. But and then PayPal got punished for it. It seems to be, I don't know. I don't know how you could keep pushing a company down, even though financially they're still doing okay and 9 times earnings. I mean, realistically, PayPal at 9 times earnings doesn't even need to grow crazy rates anymore now. This is the thing, even PayPal growing at 5% would still be, I think you could justify this valuation now, which is absolutely crazy. So yeah, really, really strange to see. And the next one is Google. Google down 9% today. So I don't know if you remember, you might not have done, I did a stock market preview for the weekend, and I said Google, they have really hard numbers to hit. I'll be really impressed if they hit their numbers. The stock's been on a little bit of a run, but if they hit those numbers, I think you can justify it. What do? They hit the numbers. They put EPSB of 0.10 in, revenue growth of double-digit 11%, beaten by nearly $1 billion in revenue. And if you look at all the categories, the YouTube growth was back, the advertising was back. And when you look at a lot of other companies out there, the advertising market is still not where it was. There's still a lot of recovery to happen in the advertising space. So you think this is still in a very tough time frame, putting these numbers in, which is fantastic. But, EPS beat, revenue beat, everything starting to go back to growth mode. This was the best quarter for Google I have seen in the last year. Very, very good response on the profitability, good response on the revenue growth coming back. YouTube ads, back to double-digit growth, which is very good. You look at advertising, back to double-digit growth, which is very good. Cloud, still very good growth from Google Cloud, as you can see here. And this is what everyone's pointing out as being the weak bit. I think, Google Cloud was nearly up, was it about 1.5 billion-ish? And people went, oh, well, it missed by 20 million. I was like, Is that why we're sending Google down like 9%? Was it today? 9% down, nearly 10% down. Like, give me a break. Because I missed Google Cloud by 20 million. We're sending the stock down 9%. They've just put the best profitability growth in for over a year. They've just put the best revenue growth in for a year. Cloud's still growing absolutely ridiculous amount. They're still beat by 1 billion on the revenue point of view anyway. Google Cloud itself went from a swing of 440 million in loss up to 266 million in profitability. I was like, this is crazy. Like, this is the best numbers we've seen Google do for a long time. And the stock goes down today. It's one of those days where you look at the stock market and you go, that doesn't make sense. It doesn't make sense why you're sending Google down today. But for me, I'm not complaining. People are looking at Google saying maybe it's gone up too much, maybe it's overvalued, but realistically it's 20 times earnings now on a forward basis, and that's very cheap for the numbers that they're pulling off and the cash they're generating, the revenue growth that's coming back in a weak environment. I mean, if the market wants to send Google back down to sub 100, you go send Google down to sub 100, because I want it there. I want it below $100 where I can buy more shares and I can make Google into my biggest position, because those numbers were fantastic today that they put out. Really, really good. The stock should not be down. The stock should be up. And it was absolutely crazy to see the market doing what it was doing to it anyway. And that leaves us with Microsoft. Microsoft was up actually, I believe, over 5%. Had a bit of a pullback as the day has gone on, which I found a little bit strange because, same again, I looked at their numbers and really good numbers. Now, Microsoft, a little bit more of a richer valuation, 35 times earnings. Obviously, a little bit richer than the likes of Google. And also very much near its 52-week highs. But this is one that I can justify the move. I look at that and go, it's a rich valuation because it's a quality company. It's one of the best companies out there. I can justify a high valuation on this. And when you look at the numbers, you can justify a high premium on it because you look at the numbers, they're fantastic. I mean, EPS was a beat by 0.34, revenue 12.8% growth year over year. You look down most of the business numbers, they were good. Cloud was strong, which probably helped them. I feel like a lot of people do look at the cloud numbers for Microsoft, and they were very strong. If I actually go on to the numbers a little bit more detailed here. You see office commercial strong. LinkedIn was still pretty good considering the environment that we're in. Slower job market starting to creep in as well. Windows up, devices revenue still decreasing at the moment. But Xbox content and service revenue I was impressed with was up 13% as well. So it seems like there's a little bit of a resurge in gaming going on. Only took 2 years after all them tough comps. Nearly 3 years, I guess. Only took nearly 3 years after all them tough comps in the gaming sector, but looks like the gaming market has kind of broke its cycle now of having those tough comps and struggling for growth. It looks like we are starting to see the growth come back there, so that's really good for Microsoft. And I guess that kind of leads us on to tonight, where we have Meta reporting. And obviously, looking at Google's numbers, I am confident that I thought they were hard numbers for Meta to beat, but looking at Google, if they've smashed it how they have done, maybe Meta go smash it as well. Not that it makes a difference, because it still might go down on share price, to be fair, but yeah, obviously positives there. Anyway, hope you enjoyed the video anyway, guys. A little bit quick update on my thoughts on some stocks making some moves there, and some very strange moves out there at the moment. Anyway, I'll see you in a bit.